Hello friends, hope you're doing well. Chris Lee, CPA here, back with another video for you. And today we're going to talk really quickly through a quick video talking about how to fix tax return mistakes if you discover them before the IRS does, right? So assume you've filed a tax return and maybe you underpaid your tax because you forgot to report something or that sort of thing, or maybe you overpaid your tax and you want to get a refund from government. You can undo those mistakes. And that includes, in some cases, if you missed elections or that sort of thing, we can go ahead and, correct those so that everything is on file. So there are two primary ways that we use to correct tax returns to get the correct filings on record with the IRS before they contact you. So the first one is called a superseded return, and this is much less common. Kind of everyone has heard of the second thing I'll talk about, but the first one is a superseded return. So if you file a tax return and you basically need to update the return and it's before the due date or the due date of the return, the original due date or the extended due date, you can actually file what is called a superseded tax return. And that is to basically say you're going to replace the tax return that's on file with the IRS. So it is basically a replacement of the new. It's not amending the old. So that's the good thing about it. And when it comes to amended returns, it's basically treated as the new tax return, right? Like it doesn't have to go through a new processing. And so that means it's kind of more automatic. And the good news too is that when you are doing a superseded return, is that if you missed certain elections that needed to be made with your tax return on the originally filed return, usually the IRS takes the position that the superseded return with those elections are still valid. So certain elections that you make with a tax return must be included with on an originally filed return. You can't amend the return to claim the election. And when you've submitted a return that you inadvertently forgot to include some sort of election or item on, what you can do is you can file a superseded return and actually get that on file. And so you're avoiding an amended return that disallows such corrections for certain elections and using the superseded return process. Good news, you can make those election changes or include the right elections as needed on your tax return appropriately without really much IRS issue. And those tax returns do not, get placed on someone's desk in the same way that the second method, which is an amended return, does. And so examples of this could be, electing Section 179 deductions because that is an election to choose 179. In contrast to, saying bonus depreciation, which is automatic. You actually elect out of claiming bonus depreciation, but Section 179 is an active election, so you have to actually go in and do that. So if you're concerned about an IRS audit, the filing of a superseded return does not give the IRS additional time to audit and assess additional tax because they always look at the originally filed due date generally as far as their timeline for being able to assess tax. So the IRS uses the tax you show on the superseded return in determining most penalties and interest and all those sorts of things that might go along. If there is an underpayment penalty and accuracy related penalty in an audit. So say you do file a superseded return to get some sort of correction on file with the IRS is not going to look back at the original return you filed. They'll look back at the superseded return because the superseded return still gets treated as the original filing, and that is what they will use to assess penalties, interest, all those sorts of things. So filing superseded returns, generally you can do electronically through a software. However, generally it needs to be the same software. There are kind of limitations when it comes to the e-filing process. But yeah, it's very similar. There's no special form you need to do. Usually it's just kind of like a button in the system that says it's superseded. What it'll do is it will basically register on the tax return. It will kind of print superseded across the top. And then when it gets registered to the IRS, it's going to know that it's kind of a new tax return that's replacing the old based on the back-end programming that's going to happen. So that's kind of our best bet. And that's actually why for basically every single client I put an extension on file, is even though we do our best doing tax returns correctly and all those sorts of things. We want the smoothest path possible if we need to update something, and the superseded return will do that. And when we file an extension, it gives us, up until October 15th to be able to make any sort of corrections without it having to be an amended return process. And so if we didn't file the extension, we'd only have until April 15th. If we file an extension, we have up till October 15th to do superseded returns. So that is personally my recommendation. It's like, let's just always put an extension on file, even if we're not even going to use it for like past April 15th or anything like that. If we don't think so, it just gives us good buffer to be able to do a superseded return should we need it. A couple years ago, I had a client that husband and wife were still filing jointly. However, they were in separation proceedings, and so the real issue is like they weren't communicating, but all their pieces are coming separately to me. We file we do the tax returns, all those sorts of things, submit the returns, e-file, got all the authorizations. Then what happens? Client, one of the spouses comes to me and says, I forgot to include this document. So what did we do? Did we amend the return? No, we did a superseded return, replaced it back, filed a new tax return. And the annoying thing is, happened again. They've forgotten another document in their process, and then we filed a second superseded return. So you can even do this multiple times. And then in the end, they only got one letter from the IRS saying kind of like, this is what we've got as like the final thing on file. Now, the second method is kind of the more familiar process, which is a full amended return. I'll kind of go back for a second. Also, the big benefit of superseded returns, they process much more quickly because it's kind of more of an automated process at the IRS. When you file an amended return, two things are going to happen. One, you're going to have the extra form to attach to the tax return that's saying, I'm amending this, in addition to filing the correct tax return. Second is that the second thing is that it's going to be physically put on in front of someone's eyes, whether it's on their desk or on their computer. Someone is going to actually look at this tax return. And so sometimes depending on what's going on in the tax return, something could be weird or that sort of thing, or there was an error with a prior accountant, and we're trying to assess what the risk of someone physically looking at this tax return and having questions, and then potentially opening an audit. So an amended return is going to have a physical set of eyes on it, and then that might not be something that we want. And then third, amended returns, because of that human eye component that's going to happen on the amended return, they take much, much, much more time to process. It is not automatic. You can file an amended return and it'll be 8 to 12 weeks of processing time. Expect a year. For sure, expect a year. That's the most likely scenario. So when you file an amended return, you basically are going to have more exposure for IRS audit issues as well. So amended returns are something that you want to take, carefully into consideration. Last year, I filed, I had a new to me client. We discovered, an error that was to their detriment. They basically overpaid the government, and we assessed that low risk, that any other issues are in the tax return. We're going to go ahead and file an amended return. What they do, they got $50,000 back from the IRS, basically, and it passed a human eye review. So that's the good thing. That's kind of what you want to do when you're looking at considering an amended return, is what's the overall risk exposure. Now, if you're not a tax professional and you're kind of like hearing this, the question is, how do I know if I've been doing something right or not? Even if you're not going to entertain a tax professional, in an ongoing relationship, just pay them $200 to like look at your tax return if you think you have a reason to amend it or something. Like 30 minutes can, 30 minutes with a fair, like a conversation, someone could say, hey, this looks weird on your tax return, don't file an amended return, might be not great for you. Otherwise, yeah, sure, go ahead and amend it if something didn't come through correctly. So those are the two ways we want to do it. I would always recommend a superseded return, and for that reason, I recommend everyone put an extension on file, because it gives us up to October 15th to be able to fix something. If it's an individual return, if it's a business return, those can also be filed under superseded proceedings as well. Put them on file. If it's a pass-through entity like an S corporation or a partnership, we can have till September 15th, and if it's a C corporation, we can have until October 15th as well. So superseded returns are always my recommendation. They're much more automated and quicker processing and lower risk. In an amended return proceeding, because it's going to go in front of a human set of eyes, you really want to have a really good facts and circumstances. And also when you're amending a return, because it's going to go in front of a set of eyes, you're basically telling someone, I made a mistake. And so the question is, well, did you make multiple mistakes? So when we do an amended return, most of the time we want to limit that exposure, because there's already going to be a sense of these people don't do their tax returns right when a person at the IRS is reviewing an amended return. And so when we do an amended return, we really want to just change, one specific item. There needs to be a good, clear reason as to why we're doing it, and then go from there. You don't want a full set of, nuances and things happening in the tax return that would, make someone suspicious, right? And so, yeah, those are the considerations we want to think through. So, yeah, as we're kind of like wrapping up filing season and people are in the thick of things get missed. Just be conscientious of your options, and recommendation, even if you're filing by April 15th, go ahead and pop out that extension, right? Because it gives you more time to do a superseded return should you need it versus a full-blown amended return. Yeah, superseded return is the other way to go if we can get that done. So anyway, hope you guys are doing well, and if you need to have a consult, feel free to click the link in the video description, and talk to you soon. All right, bye-bye.